This is the briefing for Friday, June 5th. I didn't think I'd be home early enough from my business trip to do a recording tonight, but I did. I was able to get home, and I'm glad that I did. Evidently, as I discussed in the Tuesday briefing, whenever it was, there is a Joe indicator that some of my clients claim is work in progress, but that it basically says that when Joe is out of the office and can't trade because he's traveling or on vacation, that the market makes a big move in one direction or the other. And that's certainly what we had in today's trading. As you can see right here, these are the hourly charts for the spiders, the Qs, and the IWM. Now, for a couple weeks, I've been talking about the market internals and about how they are suggesting that this rally is not just weak, but continuing to weaken with each passing day. So you can see here in the spiders, we lost about 20 points in today's trading. In the Qs, we lost about 35 points. And in the IWM, the Russell, we lost about 11 points in today's trading. So, and you can see it's pretty clear that volume increased on this move, volume increasing, not so much in the IWM. That's going to be very interesting. You see breadth was declining. S&P breadth was negative 26 shares, negative 2,660 shares in the NASDAQ, and negative 568 shares in the Russell. So NASDAQ taking the brunt of this. Now, one of the things I talked about over the past couple of weeks, or at least the past 2 weeks, is the fact that it's pretty clear that the higher weighted stocks were carrying this market higher, and that the broader market was basically beginning to sell off, and more shares were beginning to trade lower as opposed to higher. And mathematically, the higher weighted stocks can carry an index higher for a time, but when the majority of stocks, the balance of stocks that are not weighted or are equal weighted in an index are beginning to trade lower, then that would then suggest that at some point in time they're going to outweigh the higher weighted stocks, and you're going to see some type of a counter trend rotation. Other market internals certainly have been signaling that this move today was certainly a strong possibility, and that's certainly what we got. It was a pretty bad day, especially for the NASDAQ, as you will see now. This was my levels of support. If you can go back to the other briefings, you'll see that I've had these up for some time. So about the 737 in the spiders, and you can see we stopped right there at the 737 level. Same thing with the Qs, stopped right around the 707 level. The Russell a little bit farther extended. The chart didn't the chart size didn't give me enough time or enough space to put up a support level, but we'll address that when I get to the daily charts. So, I want the two most important things I think I've been stressing in the briefings has been what's been happening with total volume. This is NYSE total volume. This is NASDAQ total volume. You can see we had a big spike in NASDAQ total volume. This is net volume, up volume minus down volume, and this is what I've been talking about. And I even said several times that this move here in net volume in the NASDAQ was pretty scary, especially since you can even see here that volume was increasing as more and more of this volume was selling volume as opposed to buying volume. We had a little bit of an anomaly right through here as it broke through the downtrend, but certainly it was made up for it in today's trading. The same thing with NYSE net volume. That was down. The other thing that was even more concerning was what was happening with the percentage of stocks above their 20 and 50-day moving average. And I pointed this out in the last briefing. You can see this right here. You can see that high in the percentage of stocks above the 20-day moving average, and that's where price was. If you look at what's happening here, you can see what happened there. And then, of course, you get this move here. We had this move. We did see somewhat of a recovery. And then, of course, you can see what happened going forward. Now, we're pretty stable in today's trading concerning the 20-day moving average. This is the 50-day moving average. Same thing occurred. You can see that's the high, and there's where price is, and you can see what's happened, and we can see the trend is basically down In the NASDAQ, we're looking at the same thing. Once again, this is a bad tick. I've not not gotten rid of it yet, but that was a bad tick in the percentage stocks above their 20 and 50-day moving average. And then, of course, the Russell is the same thing. You can see what's been happening here based on this move. A little bit of recovery in all over the indices. This is the 50-day moving average also. So the question now is, where are we going on Monday? So first of all, I don't see, even though we're at least intermediate, short to intermediate term support levels in two of the indices, I don't see exhaustion at this point in time. Now, it doesn't mean we're not going to see some type of a pause, because we had a lot of damage done in today's trading. This is a daily chart of the spiders, and you can see the move that we made in today's trading. Next level of support I have coming in a longer term is the 720, let's call it 728 area, which would be this last previous low. Now, breaking that would be pretty significant, because that would mean that we're in a greater degree time and price counter trend rotation. We know that in a trend that markets run and pause in all degrees of time. So you can see run, pause, run, pause, run, pause, run, pause. Breaking that previous higher low would then suggest that this is a greater degree time and price counter trend rotation. And we're looking at potentially testing the 700 level, which would be the next level of support that I have anyway. See volume increasing on the move down. 52-week highs minus 52-week lows, collapsing. And then you can see market breadth has been declining overall ever since this rally started some time ago. And then in the Qs, we're looking at the same thing. The next level, or the next higher low, I should say, comes in right around the 695 area. And then I've got support just below that at the 686 area, 687 area, mainly because there's a gap here, and that's convictive buying. And if the buyers who bought convictingly right there, convincingly, if they don't defend that price, then that's going to be the next level of support, would open up the next level of the next higher low, which would come in right around the 655 level as well. Volume increasing in the Qs. The Qs really got hit today. Breadth has been decreasing. Net volume has been decreasing over a period of time. And in the Russell, you can see the Russell getting hit as well. Next level of support, a little bit different. It's got a little ways to go, right around the 269, 270 level. And you can see we had gaps here and here. Those have been traded through. They were not defended, so that certainly opens up a free fall potential down to this 270 level, if that's what traders decide they want to do. Now, looking at where we are in terms of overbought and oversold, you can see that we are approaching oversold condition in the NYSE, and we are at an extreme oversold condition in the NASDAQ. Now, that doesn't preclude the market from trading lower in Monday's trading, and certainly it would be possible to see follow through after the damage that was done in today's trading. But let me caution you. I do not see an exhaustion move. I do not see an exhaustion move on a daily basis, which is more important. Typically, you would see higher volume, but you would see buyers that stepped in, sellers that exhausted themselves, and you'd see much more of a buying tail than we saw in today's trading. So this tells me that potentially the higher probability is we're either going to see some type of a continuation of the decline in Monday's trading. But the key to that is going to be what happens with market breadth. If we have weaker breadth than we had in today's trading, and there's not a divergence, then that's going to suggest that we are going to see a continuation of the move lower, and then we just have to watch and see where we see exhaustion on part of sellers come into the market, and then anticipate some type of counter trend rotation. On the other hand, if we see a lower low, and we see that that breadth is stronger than it was in today's trading, that would then suggest that we're going to see some type of pause, some type of rotation back up, and then determine how that develops, whether it is going to be a short-term pause or a long-term pause. Those of you who are familiar with Elliott Wave, It's pretty clear. 5 waves down is an impulsive trend. The third wave always the most impulsive, and you can see we've got a first wave, second wave, third wave, anticipating potentially a fourth wave, and then maybe a fifth wave. I used to trade exclusively with using Elliott wave theory, but I've learned that it's like a lot of technical aspects. You really don't know if that's the case until after it happens. But it's a tool, and I keep it in the back of my mind. And when I see something like this, it reminds me that, okay, potentially we could not be through with this wave 3, or we could be ready on Monday to see some type of a fourth wave, some type of a counter trend rotation. If that were to occur, 744 would be upside resistance in the spiders, 715 in the Qs, and about the 783.50 area in the IWM. So the key to Monday is if we see lower prices, then this move, the lower that we saw in today's trading, is not complete as long as breadth is weaker than it was today. If we see a low with a divergence, then that means we're going to see some type of pause and or rotation back up. Then if we just start right up from the get-go on Monday, if this was overdone and we see a move up right at the open, then that's going to suggest potentially how that develops will tell us whether this was one and done, or whether we can anticipate another move back to the downside before we seek lower support levels and potentially then some type of counter trend rotation or pause. We will be at an extreme oversold reading if that occurs on Monday's trading. So what happens is going to be very, very important. Key to this is if we see lower prices, are the internals continuing to weaken below what they were today? That would suggest a continuation of the move, or are they strengthening, which would then suggest some type of pause or counter trend rotation back up. Have a great weekend, and I will definitely pick this back up on Monday. Should be a very, very interesting trading day on Monday.